Okay, welcome back. Things are looking okay. The SGX has picked up a little bit of pace, and 18,009 or so is where the SGX Nifty is indicating opening at. Now, Sonia and Nigel, this is a big day for Indian equity markets for the simple fact that starting today, we fully operationalize the T+1 settlement cycle. Till now, it was T+2, right? You buy or sell a stock, T+2, trading day plus 2 days, you get the stock in your demat account. Yeah. That goes to T+1 starting today. Actually, the process started sometime in February last year, February of 2022, and SEBI has done this in a very phased manner. And the last 256 stocks, which include, by the way, the Nifty stocks, Sensex stocks, and the large liquid institutionally held stocks, these also are now going into the T+1 settlement starting today. What does this do? This basically brings more liquidity. I mean, you're able to do more because you're getting the stock or the credit if you sold stocks in your account faster, which means, I mean, it's faster turnaround. And of course, this percolates down to pretty much, the entire market. There are already kind of voices from other asset classes, mutual funds and ETFs and things like that saying, well, if shares can be settled on a T+1 basis, why can't other things, debt, etc. even? So this is a very progressive, very solid move coming in from SEBI, which has now been operationalized starting today. Nitin Kamath is founder and CEO at Zerodha, the largest broker by far in the country. Nitin, great to have you with us here. I know you're not too well, but thanks very much for taking out the time and joining in. Your quick thoughts, Nitin, on this T+1, which now is fully operational.
Yeah, thanks, Prashant. No, I mean it's actually quite phenomenal that like how easily we've transitioned over the last 1 year into this T+1 settlement cycle without any issues at all, right? So I mean we are one of the first countries. I mean we are actually the first country in the world to completely go to T+1 across the entire market. I think China is T+1 in bits and pieces. I mean, kudos to SEBI and everyone who was behind making this happen.
And this is happening in a phased manner, right? I mean, have you seen the impact of the earlier? Because the process started in Feb of 22. Right. What has been the impact really? More liquidity, faster turnaround, etc. Have you been able to see that in data?
Yeah. So the thing, while the settlement was T+2, people could use the funds. I mean, there is this whole concept of what is called as an early pay-in. Yeah. So you could have done an early pay-in and given the customer, funds to trade more. So I don't think liquidity-wise, it's going to, significantly make a big difference because even today, like even yesterday, for example, if you had sold a stock, you would have gotten funds to trade more immediately if you wanted to, right, across most brokers. So I think what, people couldn't withdraw the money as in, so if you sold a stock and you wanted to kind of use the funds for any reason, you had to wait for 2 days. Or, if you bought a stock and you wanted to say pledge the stock for some reason, it would take you 2 days because it would take 2 days to get credited to the demat. So in that way, this is, there's a much faster turnaround. Yeah. Also, just generally it kind of helps for the working capital requirement of the brokers, in a way, because if you allowed if you gave credit to a customer who hadn't yet received the proceeds for 2 days, someone has to fund that for 2 days, right? I mean, it used to be the broker's working capital. Yeah. So now, it kind of helps that it's just for 1 day.
No, absolutely. It's wonderful. Nitin, since I have you on, I just wanted to ask you, I'm sure you've seen that SEBI study, right? On asking a simple question, do people who trade in the futures or options space make money? And the answer, and this is, I mean, they put out a 33-page report, which I went through, and we'll present this in more detail later. But the answer, and this is for 2 years only, so caveat, FY22 and FY19 pre-COVID, and FY22 was, the bulk of the year was calendar 2021 when, trading activity zoomed because people were stuck at home. But your thoughts on the data? I mean, the data shows 89% of those who traded lost money, 11% made a profit. Your first thoughts?
I mean, we've been quite vocal about this for a while now, because I think one of the flip sides of this whole influencer kind of led, activity in the market is that, a lot of people have come to the market with the wrong expectation that it's somehow easy to make money in the markets. So, I think people need to come with the right expectations. Then they will do, kind of trade the right way as well. So we've been quite vocal about this for a while now, as in saying that, while 11% make money, I think it's just 1.5% who actually make more than, like bank fixed deposit returns. So, and this is something that, we've published multiple times to, and, shared with the customers as well. So it's phenomenal that, the regulator is doing this, because in a way it's setting the right expectations out there. Now, is that 10% number too bad? In reality, it isn't. I mean, see, the thing is trading, active trading especially, right? I mean, trading derivatives, or, even intraday equity trading with leverage, it requires a lot of skill. It's like, if you pick up 100 people who started businesses and you want to see after 5 years how many made money doing a business, the number would be probably less than 10. So that that 5 to 10% kind of number, it's kind of the similar. The hit rate is very similar if you kind of pick up any kind of walk of life which requires a lot of skill, some luck, to succeed. Be it a sports person, be it music, be it running a business, right? I mean, these kind of walks of life, it requires skill, hard work, and also a little bit of luck to kind of hit it out of the park of sorts. So odds wise, it's very similar. So like I said, if you actually want to see people who have really made money in the markets, a lot more than bank fixed deposit, I mean, that number is closer to 1%.
Yeah. And you're absolutely right. You've been very vocal in kind of cautioning, investors, people on your platform, other platforms, that trading, it's fascinating, but it's one of the toughest things to do for a living, at least. Absolutely. I mean, I think this SEBI study and so many others before it kind of proved that. But thank you very much, Nitin. Appreciate you joining in. Great to speak with you, and take care of that back of yours. We'll touch base once again later. Sonia, back to stocks and autos.
Absolutely. The big moves are coming in the auto space this morning. Tata Motors, Bajaj Auto are all your big movers, up 3 to about 6 odd %. So Prakash Diwan is still with us. So let's get just one comment in from him. Prakash, the stock I wanted to ask you about was Amara Raja Batteries. Good numbers this time, and they're making big strides in the electric vehicle space. Any thoughts here?
So, Sonia, I think it's more of survival. What they're clearly doing, as I told you last time, was they're playing catch up. They've been a bit late to the party on the EV side. But given the fact that they understand battery tech and they have a fairly strong penetration with OEMs and the replacement market, this augurs well for them for sure. I mean, they can't do without it. So very clearly, that's a strong move. But the good part is the conventional battery business has paid off this time. After a long time, we've seen some sort of a revival in margins and all. So that's great. But Mike, I keep on bringing this up. There are some of these new age EV battery suppliers who are doing so well. There's one company that's again, I'm being repetitive on this, but Batrix, which is from Cabra Extrusion, has got a new approval of sorts, a new certification that enables it to be qualified for a lot of the other applications in the EV side or two-wheelers now. So, those are the new age businesses that you would have to compare it with. But I'm sure Amar Raja, these numbers will at least hold it in good stead after a long time. Yeah.
Okay, well, Rishi Vora of Kotak Securities tracks this space very closely. So let's go straight to him. Rishi, thanks for waiting by. These are going to be the big movers in trade. But first on Tata Motors, I wanted your thoughts. It's already gained about 12-15% in the month of January. Is there more upsides post the numbers?
Good morning, Sonia. So if you look at Tata Motors, the current quarter performance, MHCV segment has done exceptionally well. Margins have expanded by 440 bips on a sequential basis. Even JLR performance was broadly in line with our expectations, but the free cash flow generation of 490 million pounds was a good achievement for the company in the current quarter, and we expect further free cash flow generation for the company coming through in next quarter as well. So, Tata Motors, if you look at last 1 year performance, they have been quite range bound. And obviously now the things are turning around for them. JLR volumes are gradually improving amidst improving chip supplies. Also, CV's profitability is improving. PV segment is doing quite well. So, all the segments now are well positioned to benefit at least in the coming quarters, and we may see some up move in the name.
Okay, there's a big electric vehicle play, right? I mean, all the EV stocks are doing well, whether it's TVS Motor, Amara Raja is getting into EVs in a big way, Bajaj Auto is now expanding their EV portfolio in a big way as well. From this entire basket, which one would be your pick of the pack?
Among, let's say, among the passenger vehicle segment, right now, Tata Motors and Mahindra are making big strides in the EV space. We will see, a lot of launches. In this year as well, Tata Motors will be launching a few EV models. Mahindra, they've already launched XUV 400, and they will be starting deliveries soon in March. Even they will be launching born electric platforms by December 2024. So a lot of launches will be done by M&M and Tata Motors. Even Maruti would be launching their first model, EV model in 2025. So passenger vehicle segment, we are seeing at least the domestic players, picking up their launch pipelines. On the two-wheeler side, TVS has been the most aggressive among the incumbents. So they have already launched the refresh version of TVS iQube, and they will also be over the next 6 quarters. They'll be launching a lot of EV two-wheelers as well as three-wheelers in the range of 5 to 20 kilowatt-hour battery space. Bajaj Auto, while they have launched Chetak in January 2020, but after that we haven't seen any further launches. But now management has guided that over next 12 to 15 months, we will see them launching products across two-wheeler ranges as well as in the three-wheeler side. So incumbents are coming up, with the newer launches in the two-wheeler space. Even Honda would be launching their EV two-wheeler product by 24. So 24 in that sense would be an exciting year. We should see a lot of EV launches across two-wheeler and passenger vehicle segment.
Since you mentioned Bajaj Auto, I just wanted to get a couple of brokerage upgrades that have come in on Bajaj Auto post the numbers. In fact, JP Morgan has upgraded Bajaj Auto to an overweight and raised the target price to 4,400. CLSA has raised their target price to 4,600. Jefferies has at 4,300, and all of the target prices are well above the current market price. And the 3 or 4 key reasons for the upgrades: the EBITDA per vehicle has risen 18% quarter on quarter, which is at an all-time high. Strong earnings beat despite weak exports. Increasing aggression on EVs and lower raw material costs and better forex realization. So, Rishi, since you were mentioning Bajaj Auto, I thought I'll just put all the brokerage upgrades on board. Finally, I wanted your thoughts on the tyre space, because SEAT actually disappointed a tad bit. The volumes were lower and the management said that two-wheeler OEMs are not doing that well in the domestic market. Your thoughts here?
See, tyre space, if you look at SEAT's performance, actually revenue sequentially declined for the company, mostly on account of two-wheeler OEMs not doing well, as well as there has been demand moderation both in the two-wheeler replacement segment as well as on the export side. So now, the tire stocks have done well over the last 6 months, mainly on account of correction in RM basket, both natural rubber as well as crude oil. My sense is most of it is now being already priced in the current market price. Overall, the demand on the replacement side continues to remain steady, not great. So, we may see some pressure on the replacement demand segment, and hence, if the demand does not recover on the replacement side, then companies might have to pass on some of the benefits which they are accruing because of the correction in the commodity prices. So don't see much upside from current levels on the tire names. I'll be a little cautious. And obviously, if China reopening plays out and demand recovers in China, then natural rubber, where China is one of the largest consumers, we may see prices further inching up from current levels, which would be negative for tire companies. So China reopening is something which needs to be watched out for in the month of February.
Okay, thanks a lot, Rishi, for joining in. The pre-opening rates are settled absolutely flat. Dixon Tech is really the stock of the moment on the downside. The company has cut their revenue guidance further just 1 month after cutting their guidance on the mobile business. So things are getting worse for Dixon Tech. And all the Adani Group stocks continue to be under severe pressure. Adani Total, Adani Transmission, Power, Green, Wilmar, all of them down about 3 to 7% But it's time now for the CNBC-TV18 budget quiz. Remember, there are prizes to be won every day. So here is today's question. The Finance Minister asked SEBI in the budget speech to raise the minimum public shareholding in companies to 35% from 25%. Your options are A. Arun Jaitley, B. Piyush Goyal, C. Nirmala Sitharaman, and D. Pranab Mukherjee. You have to send us your answers on Twitter. Post your answer as a comment on the question tweet on CNBC-TV18 News. Use the hashtag #BudgetWithCNBC-TV18. Hurry and send us your answers. Remember, we'll announce the winner at 3 p.m. today. Okay, we have less than a minute, I think, for the markets to open. It's very clear that there will be autos on the upside, and DRL as well. Post its numbers is up about 2.5%, so keep an eye out on that. And on the downside, Adani Group stocks, Adani Ports, Enterprises down in the red. Bajaj Finance would be interesting to see how that one opens up, considering it comes out with its numbers later today. And then you have a lot of other earnings, Tata Elxsi, Patanjali Foods, Amara Raja Batteries, that will be reacting to its earnings as well. Dixon, as I said earlier, will be the top loser in the broader markets. Dixon has gone ahead and cut their revenue guidance, stating that there is a fall of almost 17-18% in global shipments. So that's not looking very good. Well, that's the first take on the index. Quiet, and the Nifty is absolutely flat, down about 15 odd points. The mid-cap index is trending in the green, but just by a tad bit. Nothing great in the mid-cap index. From the frontliners, it is the auto stocks. Tata Motors is your top gainer, up 5.5%. Bajaj Auto is up 4%. And Dr. Reddy's is up about 2.5%. So keep an eye out on that. M&M as well. All the auto stocks actually are topping the charts. Maruti Suzuki too is up about 0.6%. The other pocket that's looking good is FMCG. So you have ITC, HUL, Britannia that are all in the green. And a couple of other names in the FMCG space are not looking too bad. Nestle is also in the green. Tata Consumer is in the green as well. Even pharma, Apollo Hospital, Sun Pharma, Dr. Reddy's I spoke about a while back. So pharma, FMCG and autos are the three pockets that are holding the market up. On the downside, Adani Group stocks, Adani Ports is down 5%, Adani Enterprises down 2%. Reliance is dragging a tad bit, and banks, ICICI, HDFC, Axis, SBI, all in the red, down about 1 to 3 odd %. So it's a weak opening for the market, dragged down once again by the Adani Group stocks. Ambuja Cement is also down. It was a big loser last week, big loser a couple of days ago. So that one is seeing some more pressure. But otherwise, the Bank Nifty is the one that's really taking it on the chin now. 570 points gone on the Bank Nifty, so quite a weak opening.
Well, it's a weak opening, Sonia, no questions about that. And the Nifty Bank is the one that's sticking a pounding, which is getting a little bit worrying. You know, we want the Nifty Bank to bounce off these levels of around 41,000 odd, otherwise it could get rather ugly. So let's keep an eye on that. For the time being, 550 points lower. In terms of stocks that are moving around, Amara Raja, that's flying away. That's up close to around 4% in otherwise wobbly market. So let's pull up that one. CEAT as well. Well, it was a mixed set of numbers that did come out, but the stock has opened up with a gain of close to around 1%. So good going out there. VIP Industries, well, the travel resumption has helped them in terms of their numbers. The volumes as well were up by close to around 25%. But the stock, remember, has run up, big time. So there is some profit taking that's coming about. Tata Motors DVR as well as participating. That stock is flying away. It's moving in tandem with the Tata Motors stock on the back of positive numbers. Dixon Technologies, the flip-flop on the guidance, 15,000 crores in October. It came down to around 14,000 crores in December. Now they're talking about 12,500 crores. Well, the market doesn't like it one bit. It's down close to around 10%, and there is no clarity on FY24. Hence, that stock is under pressure. A couple of other stocks from the broader markets which are doing pretty well. Ugro Capital, well, that's up and about. Strong all-round performance that we saw there, Ugro Capital. So let's pull that one up. Jindal Saw as well, another smaller name. We don't talk about that very often. Well, that stock as well is up close to around 5%. The numbers look pretty good. Margins are pretty good. And they've done some bit of deleveraging as well in the past. They have flattened to deceive, but for the timing, that stock has opened up well in the green. Cipla as well had opened up in the red, and Patanjali is down close to around 5% as we speak. So plenty of stocks that are moving around. Prashant, what else?
Nigel, the big pressure is coming, as you said, from banks, right? And it's not looking good because it's basically broken below the 26th of December low. Any hope that this was to be some sort of a double bottom, I think that is completely out of the way. That level was 41,569. We're at 4,800. So well and truly below that level in one full swoop. So let's just take a look at a few other names, and right out of the gates, volume-led activity is huge. You can see that in HDFC Bank. The intraday should come up. The HDFC Bank is not what we talk at 9:15 or highlight, but look at the activity on that one. For this time of the day, even on a name like that, check out volumes. It's down 3. You've got Adani Enterprises. So ports is the one which sold off on Wednesday, the last trading session. Enterprises is down 4.5%. So that's a 150 rupee knock. ICICI Bank is down about 2.5%. I'm just kind of going in a descending order in terms of what's coming up on the volume-led losers list. And ICICI Bank is there. Axis is there with a 2% cut. Dixon is limit down. It's kind of rare to see names like Dixon being on a circuit and on earnings that too, by the way, but that is the case. We spoke with the management, as Nigel pointed out. HDFC Limited is down about 2.25%. You've got two other names. Adani Green is down a full 13%, and Adani Transmission is down 14%. Those should be up on your screen. And on decent-sized volumes for this time of the day. Adani Total is down about 16%. So these are the pockets which are seeing some pressure. Adani Wilmar is down about 5% as well. ACC and a few others are down. What else? Container Corporation is down 2% or so. You've got United Spirits, which is selling off. USL had a bad set of earnings. It sold off on Wednesday. It was a big red bar, and it's starting another 2.5% lower. Very poor performance basically this year. From 1,000 levels, it's down to 750 very, very quickly. So that's United Spirits for you. Market breadth on an aggregate basis is still positive. I mean, mind you, absolutely no doubt about it. As Sonia was pointing out, Tata Motors is the big gainer, along with Bajaj Auto, both up 5 and 6%. So these are very large gains. Bajaj Auto came in the earnings for the third quarter came in the dying last minute, 2 minutes of market closing on Wednesday. The stock saw a spike, but the full reaction is coming through in trade right now. And Jindal SAW is the other one, which is up about 10% or so in trade on the back of very strong volumes. So, the market is lively. I think that's the way to put it. A lot of volumes, market breadth not that apart in terms of number of gainers and number of losers. All in all, it's a pretty lively kind of start with lots of volumes. Harsha Upadhyay is joining us, Chief Investment Officer, Equity at Kotak Mutual Fund. He's our Market Master of the day. Harsha, great to have you with us here. Thank you very much. I remember the last time we had spoken, you'd indicated that corporate India financials were starting to deteriorate a little bit, and you kind of highlighted specific worries. How is that? Has that played out in terms of impact on stocks? Anything additional you want to mention looking at the earnings that we are seeing in the third quarter? Because back then we were kind of, the comment was based on the fact of the second quarter numbers, but we've got new evidence now. What are your new thoughts, additional thoughts? Go on.
Good morning. What we have seen until now is only frontline companies announcing results. And until now, we have not seen so much of pressure on either profitability or cash flows, I would say. In fact, it's been slightly better than expectations at this point of time. As of Tuesday, there were about 17 Nifty companies which had announced results. And as per expectations, we were looking at about 8% profitability growth. And that has been actually about 10.5%. So to that extent, at least the early results that we have seen have been slightly better than expectations. And usually you would see the second half of the earnings season is where you would see more disappointments. Keeping some room for that, I would say we may end the overall earnings season more or less in line with expectations.
Okay. By the way, just a couple of more nuances on the auto sector. After Amara Raja's strong showing, Exide is the one that is powering ahead. So in anticipation of good numbers, Exide is up 2.5% right now. Amara Raja and Exide both doing pretty well at the moment. Ashok Leyland, after Tata Motors numbers, Ashok Leyland is the one that's gaining ground now, 3% higher. Hasn't come out with numbers just yet, but looking pretty good. So there's a scramble for buying into these names after the good showing that we've seen. Harsha, in fact, I wanted your thoughts on the sector itself. It's come back after a long lull period. What are the pockets that you would buy now?
Good morning, Sonia. Clearly, auto is one of the sectors where we have been positive for the last couple of quarters. We have been building our positions there. And if you look at the results that have come out until now, our thesis continues to hold true, and we continue to remain positive. Some of the supply constraints that we were seeing in the industry are kind of easing. We expect that commodity inflation, which used to hurt margins in the past, is not going to be as possible going forward. And overall, in terms of the new product launches and the kind of interest that we have seen from the consumers, seems to indicate that demand is likely to remain quite healthy even going forward. So overall, auto remains to be one of the sectors where we continue to remain positive.
Okay, hi Harsha, good morning. The sector that's surprised on the positive side is the IT space. Everyone was throwing in the towel. There were risks still that could be on the table. But what's your sense? It's seen a big pop-up. Do you think it's good for more?
Nigel, difficult to say, because if you look at structurally, US growth and European growth will remain under pressure even going forward. What we have seen until now is the execution of IT spend that was penciled in sometime in the beginning of the last calendar year. So at that point of time, you didn't have any of the global worries in front of you, and IT spend was generally strong, given that we were coming out of COVID disruption. But as of now, when you look at the new IT budgets, which will be decided as we move forward, there will be a issue in terms of how businesses will look at their profitability, and their worries on the profitability will drive IT spend lower, in our opinion. So to that extent, 2023 IT business momentum could be lower than what we have seen in 2022. If that comes true, then I think you may see pop-ups every now and then, given that valuations have corrected. But on a structural basis, I think some of the domestic-facing sectors would do much better than IT, in our opinion.
Do you have any major expectation from the budget this time, Harsha? I mean, it's expected to be a capex-heavy budget. The focus could be on manufacturing. But that's generally what we do, right? Anticipate these things ahead of the union budget. Your thoughts?
Clearly, over the years, we have seen continuation of policies through budget and otherwise as well. So to that extent, clearly PLI, manufacturing sector, these are some of the areas where government has been focusing even in the past. Affordable housing, or how to revive rural economy. These will be some of the key aspects that you will find from this budget as well, is what we think. Overall, I think it will be a tight balance between how fiscal prudence has to be looked at, given that there are growth requirements as well in terms of the capex spend. So I think it will be a fine balance between these two, is what you can expect.
Look, when the last time you saw Tata Motors up 8%, it's at 450, and it's a sharp, huge volumes as well. It's seen earnings upgrades, right? I mean, that's what matters for stocks, upgrades or downgrades, and this one has seen upgrades. A lot of pessimism, but JLR has done well, as Sonia has been highlighting. Of course, I mean, there are still doubters who say, well, will this last? But for now, it's up 7. Bajaj Auto is the other one, heavyweight, 6% on that one. So this is looking good. Zomato is up about 7% as well. A lot of people, Harsha, we've spoken to recently have, not a lot, maybe a few, have referred to, and they've bought stocks like Zomato, they've bought stocks like Paytm, some have bought delivery. Any view on these names? It's not, they've been around for a while. Prices have corrected a lot. Companies in many cases are now openly talking about profitability in FY24, if not FY25. What's your sense?
Prashant, you're right. Prices have corrected, but I'm not so sure whether the valuations have corrected in some of those names. Entire internet space is, to us, seems like it's still quoting at a very high valuation. So you can't just generalize the entire space and take a view on the space. Yes, there will be some companies which will do better in terms of the business models within that space, and you will have to look at those from a bottom-up perspective rather than taking overall view that the entire sector has corrected on a price basis, and hence it becomes a good buy or stock pick.
Okay, well, just before we let you go, there's been a lot of pressure on the Adani Group stocks. Just wanted your thoughts here and what the approach should be now.
Sonia, as you know, we don't comment on individual stocks or individual groups. So to that extent, I have no comments to make. But I'm sure that people who have been in the equity markets are used to volatility in the stock markets. And if you're a long-term investor and if your portfolios are well diversified and well balanced, I'm sure you'll be able to wade through this volatility as well.
Okay, by the way, there's plenty of it. Now the market is selling off like 9 pins. So just look at that. The Sensex is now down over 500 points. The Nifty is down about 130 points. So it's a rapid selling pressure that you're seeing. And Adani Group stocks are taking it on the chin this morning, along with a lot of banks. So ICICI, SBI, Axis Bank are all down to the lowest point of trade. Not looking like a good start to trade at all.
No, Sonia, it's not. And by the way, you've got the Nifty itself, which is now below the January 12th low. 17,761 was that level, and we've gone through it very quickly. I mean, just now, 17,750 now on the Nifty. I think we should put that on alert as well. So 17,761 is the 12th of January last sort of major decent swing low, and that has now been breached on the downside. The Bank Nifty did that right at the word go in the morning, and we kind of alluded to that. That's, of course, that's the index which is looking weaker. It's more firmly in the grips of a downtrend, at least right now. Nigel.
You know, I'll tell you what, the Nifty Bank, it's hit the lowest level since November 3rd.
Yeah.
You know, we didn't break that 41,000 odd mark, but today we've gone back to those levels, and that's the problem pocket. I'll tell you what, you're talking about in 2 sessions, the Nifty Bank going down 1,800 points, and we're not yet done. You want to see some kind of support coming for the Nifty Bank, otherwise you're just throwing in the towel with regard to the Nifty. So just thought I'll make that short point. November 3rd is when we went below that 41,000 odd mark. So clearly the Nifty Bank, that's the one that's getting a hard knock. And there was a bit of a relief that we saw, but that got sold into. So let's see how this plays out.
Okay, well, let's get back to talking about the Adani Group stocks then. It all ties in, right? Abhishek is here to tell us what brokerages have to say on the exposure that banks have to the Adani Group companies. That could perhaps be one of the reasons why the banks are under pressure as well. Abhishek, over to you.
Well, Sonia, as you mentioned, brokerages are saying that the exposure is not more than a worst case scenario 0.7% of the loans, or about 1.5%, or to certain banks about 5 to 6% of net worth. So to begin with, CLSA has written a note. They say that the Adani, where the debt sits, let's understand that most banks have indicated that they have largely financed the assets with strong cash flow, such as airports or the ports as well. Ballpark exposure as per FY24 numbers, private banks have about 0.3% of their total loans, about 1.5% of net worth. PSU banks have about 0.7% of the loans, or about 6% of the net worth. Jefferies has also written a note. The consolidated debt of Adani Group is about 1.6 trillion or 1.6 lakh crore, which is ex-shareholder sub-debt. So debt to EBITDA is, however, down to about 3.2x in FY22, which compares to about 4.3x in FY16. So acquisition of cement business, that may add about 60,000 crore of debt. However, it's also lifting the cash flow of Adani Group. So diversification of borrowing mix, they have cut down the share of Indian banks to about 33% of the debt, and about 0.5% of the sector of risk being for the banks. So for banks, the debt to this group forms about 0.5% to 0.7% of the loans for PSU banks, and about 0.3% to the private banks. Back to you.
Okay, that's very helpful. Thanks a lot, Abhishek, for joining in. So that's the banks and the kind of exposure that they have to the Adani Group. By the way, both the pockets, banks and the Adani Group stocks, are the biggest losers today. But let's move on. CEAT's earnings came in below estimates in what was a seasonally weak quarter. The volumes were down 6.5% sequentially, with exports also being hit by macro headwinds. The positive, of course, is that margins have expanded to 8.7% due to a big decline in raw material costs. Kumar Subaya, the Chief Financial Officer at CEAT, joins us now to talk about that. Mr. Subaya, good morning and thanks a lot for joining in. On a sequential basis, the volumes are down, and you did mention in your conference call that the two-wheeler OEM market is witnessing some pressure. Do you see a further slide in volumes in Q4, and what do you think you could end the year with?
Good morning, Sonia. Thanks for having me on your show. As far as Q4 is concerned, quarter on quarter, we expect a two-wheeler to grow. Year on year, as well as quarter on quarter, in Q3, we saw weakness in two-wheeler demand. Going into the next quarter, we expect the demand to pick up for two-wheelers.
Okay. All right. Hi, Mr. Subaya. The last time we chatted, we were trying to get you to give us a number on the margins. But it's good to see that there has been some improvement as raw material costs are cooled off by close to 4%, I think, on a sequential basis. The good news, though, from a shareholder's perspective, is it's likely to cool off by another 3% for this quarter. Putting that in context, and if volumes are going to improve, margins go to double digits in Q4?
In the last 2 quarters, Nigel, our EBITDA margin has improved from 6% to 8.7%. So about 270 basis points improvement. Okay, and commodity cost cooling off has played a role in terms of improvement in margins. You are right. We have indicated that commodity costs could go down by about 2 to 3% in Q4 versus Q3. So it should have a positive impact on our margins. I would not like to say give you any forecast for quarter 4, but we are not very far from 10% at this point in time. We are at 8.7%. So our internal target is always to reach a two-wheeler number.
Mr. Subbiah, I think you're being a little conservative, right? Volumes are going to improve, raw material costs are going to go down. I don't think there are going to be any selling price cuts. So 10% should be doable, right?
Yeah, I think that's what I said. We are not very far from that number as we speak today. Okay, and there is a good probability of reaching that number in quarter 4.
All right, Mr. Subbiah, could you give us an outlook on two things? One, do you have a view on sort of raw materials themselves from here? I mean, what is your sort of outlook? And second, a segmental demand outlook as well, if you can give me a sense.
As far as raw materials are concerned, the quarter 4 forecast or a projection that we have given has considered the sharp drop in raw material costs in the last 4-5 months. In the last 2 weeks, we are seeing some upward movement in the raw material cost. Crude is now hovering around $87-88 per barrel. And natural rubber prices have also moved up by about $100 in the last 2 weeks in the international market. So therefore, we have to wait and watch. We would not like to come to any conclusion based on what has happened in the last 1 to 2 weeks. So therefore, beyond 2 to 3% drop in quarter 4, we are not able to give any view. Okay, it all depends on what happens to important crude derivatives and rubber in the next 2-3 months. As far as segmental is concerned, exports continue to face headwinds, as we had earlier shared in Europe and also other parts of the world. So that is putting little pressure. Quarter 4 outlook is little better than quarter 3, but considering world is likely to go through a recession and Europe recovery is still not very clear. So exports could still be a little bit under pressure. On the category side, we still feel, two-wheelers, we are still not able to get any visibility with respect to demand recovery in the coming months and weeks.
Okay, so you are a bit cautious. You're saying exports could be under pressure and no visibility on the two-wheeler demand. So if the demand does not improve, Mr. Subbiah, can one expect pricing pressure in the industry? Is there any under-recovery in pricing left for you post Q3?
No, as of now, hoping that 2-3% drop in raw material costs happen in quarter 4, the under-recovery would come down. And so beyond quarter 4, if 3% kind of a raw material cost reduction happens, we would get back to where we were, very close to that level, pre-COVID level. And there may not be any under-recovery by end of the quarter. But as of now, we still have under-recovery.
Okay, got that. The other thing is your debt, right? I mean, it's a marginal up move that you've seen in debt at about 2,340 crores. Of course, there's ongoing capex as well. Can you tell us how comfortable are you with rising debt and what is the max level to which you could take it? And do you have any debt repayment plan over the next, say, 12 to 18 months?
Out of our 900 crores capex forecast for the year, 3/4 of the capex be completed in the first 9 months of the year. So therefore, and in the current quarter, we would have little over 200 crores of capex, so that we reach the number of 900. In the last quarter, we also managed to bring down our inventories sharply. So therefore, that was the reason why as to the incremental debt in quarter 3 was very marginal. So we continue to be very cautious with respect to our borrowings, and our forecast for capex as far as next year is concerned is also going to be lower than our current year. So therefore, from end of quarter 4 level onwards, we do not expect any debt to move up significantly. We would like to manage it at that level going into the next year. So as far as your second question on repayment of debt, our 2,300 crores of debt approximately has about 1,700 crores of about long-term and balance is short-term. There will be some repayment schedule in the coming year, but largely we also have a reasonable amount of undrawn limits in the overall long-term. So therefore, there is unlikely to be any pressure with respect to meeting the repayment obligations in the coming year.
Okay, all right, Mr. Subbiah, could you tell us the volume growth of at least double digits is possible for FY24? That seems to be the case for what the street is baking in. I'll tell you why. because you have capacities that are coming on stream, exports market should revive, and the replacement market as well should show some traction. So at least double digits volume growth, doable for FY24?
Okay. See, in the first 9 months, we grew by close to about 24% over the same period of last year. So therefore, we are going to end the current year, FY23, at a very healthy growth, very strong double digits. As far as next year is concerned, the key growth drivers are recovery of two-wheelers, exports, and for us even OST, where we have some dependence on Europe. And the third is that OEMs in going into the next year. So I'm not able to comment whether it will be a double-digit growth. Okay, considering last 3-4 months, Europe faced issues. In the event that it recovers, we would like to go for a good growth. Maybe we would need a little more time to understand how the market is going to unfold. Internal plans are in line with what you said, but reality, I think we'll have to wait and watch.
So any more losses from the Sri Lankan JV?
Sri Lanka has always been a profitable business. In Q3, what happened, the government increased the income tax rate, corporate tax rate, effective 1st of October. So from 18% to 30%. So in the balance sheet, you normally have something called as contingent liability. Okay, and the contingent tax liability, not contingent tax liability, deferred tax liability on taxation. So therefore, there is some effect on account of increase in income tax rates to the tune of about 6 crores in Q3. At the gross margin at a EBITDA level, Sri Lanka continues to perform well, but however, they are operating at less than 50% of our normal volume as of now. So the economy is yet to recover, and therefore it has some impact on Sri Lankan profits.
All right, we'll leave it at that, sir. Thanks a lot for joining in and giving us an update on the business. That's CEAT for you. By the way, the stock of the moment is Dixon Technology. It's down 15% right now after the cautious commentary from the management. So that's taking a hard knock this morning, Dixon Technology. They've lowered their guidance. They told us about how the mobile business is very slow. Global shipments are down 17-18%. So that one's really taking it on the chin this morning.
Dixon, by the way, Sonia, opened 6.5% lower. Yeah. So it didn't, the opening was not at circuit. So there was maybe a brief moment to kind of get in. Before, of course, it was limit down 10%, and from 10, it's kind of quickly, very quickly moved to being down 15, where it'll stay, and then it'll open up. By the way, the Nifty has had one attempt, a feeble attempt, but one attempt at a bit of a recovery. I mean, we were down 130, 140. There was a 40-point pullback, which is now, it's all happened in the last 5-6 minutes. It's already in the process of being sold into. Let's see. I mean, are these levels around 17,800 or so, which is the lower end of this band, right? All through from the last week of December 2022, this has been the band, 17,800 to 18,200. Now you've broken below that, even level-wise. But will this hold? I think is the question that one needs to watch out for. Banks are under pressure. Just a quick look at the Nifty Bank as well, which is off the lows. I mean, the Nifty Bank low in the morning was 47.33. We're about 200 points off it, 40,988. It's a 1.5% cut on the Nifty Bank as well. More stocks in focus. Lots happening market-wise. We have Shashank Srivastava of Maruti Suzuki to discuss their third quarter results later. And of course, we'll also have the management of Bikaji Foods to discuss their third quarter numbers. All of that coming up in just a bit.